Thank you, Mark, and a big hello from London. Okay, this week's commentary is going to be split into two parts. The first part will be the normal review of weekly technical patterns seen last week. However, the second part will be a little different. You see, we have only 1 day left of June. And I thought I'd do something in anticipation of this event and run through the possible monthly key reversals we may have that I can see right now. Now, none of these are certain as yet. But I will run through the ones that have qualified to be monthly key reversals and at what levels they would need to close either above or below to verify such a pattern. Now, some others have come very close and may indeed form monthly key reversals, but for the moment I will leave those alone. Okay, so back to last week's markets, and we had only the one weekly key reversal up, and that was in US dollar against the Indian rupee. The resultant move higher was brilliant. Prices took off from the recent start of May to mid-June bullish ascending trend triangle with a strong move this past Monday from last week's action, making fresh new highs, high opens, lows and closes, including today. So looking at the action since the start of May, I have been contemplating which pattern would be the best fit to describe this action, and the best I can suggest is a bullish measured move pattern. It is not perfect. For example, it slopes too much up and to the right, but I think it is a better descriptor than a rising wedge pattern. Hence, a primary target X for this would be in the 79.67 area, and a secondary harder to get target X1 would be in the 80.43 area. We're not too far from 79.67 right now. More on this in my daily FX commentaries. The weekly key reversals down were more diverse, though still few in number. We had a weekly key reversal down in US dollar against the Turkish lira. Now, US dollar Turkish lira is an interesting currency pair. You see, this pair are liable to currency jumps. This is when you have a discontinuous jump in price, and it can be in either direction after a significant period of relatively stable trading, higher or lower. In the last few months, we've had two such significant moves, as well as the weekly key reversal down last week. So far, we've not seen a follow-through lower to last week's pattern, nor a reactionary move back up either, though I do note the significant support the short-medium moving average, currently at 15.96 even, has had last week, and the significant support seen in the past by the medium moving average, currently at 15.24 even. We also had a weekly key reversal down in New York sugar futures last week. This one came slightly out of the blue, but it does tie in with the recent bearish actions, notably the April to May bearish shift pitchfork, which is highlighted in red, indeed heavily highlighted in red, as I used this to explain some point in my weekly commentary earlier this week. However, there has been no real follow-through lower this week, despite a daily key reversal down on Monday. Indeed, we've tried a bit higher, but today have moved back down to unchanged-ish, shall we say. Just keep an eye on that bearish shift pitchfork for now. The middle tine is above at 1890 today, and the lower tine is below at 1791. The final weekly key reversal down from last week was the Baltic Exchange Supramax Index. This had a fairly narrow range last week compared to some past weeks, but it was enough to be a weekly key reversal down. We've since seen a small but reasonable follow-on lower so far this week, though we are now approaching a significant piece of combined Fibonacci support in a 2381 to 2385 area. That about covers the weekly key reversals seen last week in the markets I cover. I'll now look at the prospective monthly key reversals for June. They may happen by close of business tomorrow. Okay, here goes, and there are quite a few. And I'll also try to enunciate the numbers clearly. So, we may, possibly, have monthly key reversals up in the following. US dollar against the Canadian dollar, if we close over 128.78. US dollar against the Indonesian rupiah, if we close over 14.580. US dollar against the Israeli shekel, if we close over 334.12. US dollar against the Colombian peso, if we close over 39.51. US dollar against the Swedish krona, if we close over 981.87. US dollar against the Chilean peso, if we close over 851.14. The Swiss franc Polish zloty cross if we close over 454.75. Now for some esoteric ones. ICE Dutch TTF gas baseload futures if we close over 99.45. And EEX German power base month futures if we close over 206.13. We now may possibly also have monthly key reversals down in the following. German DAX 30 stock index futures if we close under 14.090. UK FTSE stock index futures if we close under 75.13. French CAC 40 stock index futures if we close under 65.49. Kiwi dollar against the US dollar if we close under 64.56. Spot platinum if we close under 9.31 even. And LME 3-month copper if we close under 94.39. Now, I'm always happy to answer any direct questions with anyone who's interested. And with that, I'll finish this section from London. I hope that you found these comments useful.